Imagine a world where your financial life is truly yours, where you control your data, your assets, and your identity. This is the promise of Web3 and Decentralized Finance, DeFi. But as we venture into this new frontier, questions arise. How do we balance innovation with security? How do we build trust in a decentralized world? And what role does Know Your Customer (KYC) play in this evolving landscape? To understand the future of finance, we must first understand the forces shaping it. These forces are KYC, Web3, and DeFi. Each represents a crucial piece of the puzzle, interconnected and evolving together. KYC, a cornerstone of traditional finance, is grappling with the challenges of a digital age. Web3, built on blockchain technology, offers a decentralized alternative to the internet we know. DeFi, powered by Web3, seeks to rebuild financial systems from the ground up, giving users more control and transparency. KYC, or Know Your Customer, is the process financial institutions use to verify your identity. This verification is crucial in today's digital age, where transactions are often conducted online, and the risk of fraud is ever present. By confirming your identity, banks and other financial entities can ensure that they are dealing with legitimate customers. Think of it as a digital passport to the world of banking and investing. Just as a passport allows you to travel across borders, KYC allows you to navigate the financial landscape. It opens doors to various financial services, from simple savings accounts to complex investment portfolios. KYC is not just about convenience, it plays a critical role in preventing fraud, money laundering, and other financial crimes. By verifying identities, financial institutions can track and monitor transactions more effectively, ensuring that illicit activities are detected and stopped before they can cause significant harm. Before you can open a bank account, apply for a credit card, or invest in securities, you need to provide documentation to prove who you are. This process might seem cumbersome, but it is a necessary step to protect both the institution and the customer. This usually includes a government-issued ID, proof of address, and other relevant information. These documents help establish your identity and ensure that you are who you claim to be. In some cases, additional information such as your employment details or financial history might be required. KYC is essential for maintaining trust and stability in the traditional financial system. Without it, the risk of fraud and financial crimes would be significantly higher, undermining the confidence that people have in financial institutions. It helps create a safer and more secure environment for everyone. By ensuring that all participants in the financial system are verified and legitimate, KYC helps build a foundation of trust. This trust is crucial for the smooth functioning of financial markets and for the protection of consumers' assets. In addition to preventing fraud and financial crimes, KYC also helps financial institutions understand their customers better. This understanding allows them to offer more personalized services and products tailored to the specific needs and preferences of each customer. By knowing their customers, financial institutions can provide better advice and support, helping individuals and businesses achieve their financial goals. Whether it's planning for retirement, buying a home, or growing a business, KYC plays a vital role in enabling these aspirations. In the digital age, where cyber threats are constantly evolving, KYC also contributes to cybersecurity. By ensuring that only verified individuals can access financial services, it helps protect sensitive information and reduce the risk of data breaches. Ultimately, KYC is about creating a financial system that is inclusive, secure, and trustworthy. It ensures that everyone, regardless of their background, can access financial services safely and confidently. By upholding these standards, KYC helps build a better financial future for all. While KYC, or Know Your Customer, plays a vital role in traditional finance, ensuring that institutions can verify the identity of their clients and prevent fraud, it's not without its shortcomings. The current system is centralized, meaning a few large institutions control your data. This centralization creates a single point of failure, making it vulnerable to hacks and breaches. When all data is stored in one place, it becomes an attractive target for cybercriminals. A breach in one of these central repositories can lead to massive data leaks, affecting millions of individuals. Additionally, traditional KYC processes can be slow, cumbersome, and expensive. Gathering and verifying documents often involves multiple intermediaries, each adding their own layer of complexity and cost. This not only increases the time required to complete the process, but also the overall expense for both the institution and the customer. The need to physically exchange documents or rely on outdated systems can create significant friction and delays. Customers may find themselves waiting for days or even weeks for their identity to be verified, which can be frustrating and inconvenient. These limitations highlight the need for more efficient and user-friendly solutions. As technology advances, there is a growing demand for systems that can streamline the KYC process, reducing the time and cost involved while enhancing security. Especially as we move towards a more decentralized future, innovative technologies like blockchain offer promising alternatives. Blockchain can provide a secure, transparent, and decentralized way to manage KYC data, potentially eliminating many of the issues associated with traditional methods. By leveraging these new technologies, we can create a more efficient, secure, and user-friendly financial system for everyone. Web3 represents the next iteration of the internet, built on blockchain technology. This new paradigm shift is not just a technological upgrade, but a fundamental change in how we interact with the digital world. Unlike the current internet, controlled by a handful of tech giants, Web3 envisions a decentralized ecosystem where power is not concentrated in the hands of a few corporations. Web3 aims to distribute power and ownership among its users. This means that individuals have more control over their data, privacy, and digital assets, fostering a sense of empowerment and autonomy. Blockchain, the technology underpinning Web3, is a revolutionary innovation that ensures data integrity and security. It operates on a peer-to-peer network, where each participant has a copy of the ledger. This decentralized and transparent ledger records all transactions across a network of computers, making it nearly impossible to alter or tamper with the data. Every transaction is verified by multiple nodes, ensuring trust and reliability. This revolutionary technology eliminates the need for intermediaries, such as banks or third-party services, which traditionally act as gatekeepers. By removing these middlemen, blockchain reduces costs and speeds up transactions, creating a more open, secure, and democratic online experience. For finance, this means increased transparency, reduced costs, and greater accessibility for everyone. Decentralized Finance, or DeFi, leverages blockchain to offer financial services without traditional banks. DeFi platforms provide loans, savings, insurance, and trading services, all governed by smart contracts. These contracts are self-executing and enforce the terms of an agreement automatically, reducing the risk of fraud and human error. This inclusive approach ensures that financial services are accessible to anyone with an internet connection, regardless of their location or socioeconomic status. The future of the internet and finance is decentralized, transparent, and inclusive, promising a fairer and more equitable digital landscape for all. DeFi, built on the foundation of Web3, represents a paradigm shift in finance. It encompasses a wide range of financial services, from lending and borrowing to trading and investing, all operating on decentralized platforms. Unlike traditional finance, where banks and other intermediaries act as gatekeepers, DeFi empowers users to manage their finances directly. This direct control, coupled with the transparency and security of blockchain technology, has the potential to revolutionize how we interact with our money. As Web3 and DeFi gain traction, the role of KYC becomes increasingly complex. On the one hand, these decentralized systems strive for privacy and anonymity. On the other hand, regulatory compliance and the need to combat illicit activities remain paramount. This creates a delicate balancing act between preserving user privacy and ensuring a secure and trustworthy financial ecosystem. Finding the right balance is crucial for the widespread adoption of these transformative technologies. Fortunately, innovators are developing creative solutions to address these challenges. Decentralized identity platforms, for example, allow users to control and share their verified credentials without relying on centralized authorities. Zero-knowledge proofs enable verification of information without revealing the underlying data, enhancing privacy. These cutting-edge technologies are paving the way for a future where KYC can coexist harmoniously with the principles of Web3 and DeFi. The convergence of KYC, Web3, and DeFi represents a pivotal moment in financial history. As we navigate this uncharted territory, challenges and opportunities abound. While questions remain about regulation, adoption, and scalability, the potential for a more inclusive, transparent, and user-centric financial system is undeniable. The journey ahead requires collaboration, innovation, and a willingness to challenge the status quo together. The future of finance is not a foregone conclusion, it's a story we are writing together. By embracing the potential of Web3 and DeFi, while addressing the challenges of KYC, we can create a financial system that works for everyone, not just a select few. This is a future where financial freedom is no longer a privilege but a right accessible to all. Let's build it together.